Hey guys, John Henry here. So another really kind of crazy day on crude oil here. We followed it up from yesterday's movement, massive upside move yesterday, and now we went in today with more massive upside movement. So really big move up, and it really sparked from that wedge that we had yesterday. Now we ended the day with the wedge working its way down. They tried breaking underneath the lows, and as we can obviously see, they didn't do so well. So the failure on the bottom edge there tells us that the buyers are going to try to take control. Now, we opened up today with a very strong, in the sense of the candle, a gap higher, and a strong bull first 5-minute candle of the day. Now, the buyers were never even triggered in above there before turning back down in a strong bear. Now, that's likely because a lot of the buyers at the end of the day who bought that failure through the lows, they're going to take profit when you come in and you're up an extra 30, 40 ticks. That makes a lot of sense. So they take profit and we get this nice little sell down. But what's the interesting part here? Well, we push down and they stop to the tick off of those wedge highs. Now, even more interestingly, when they try to probe that high again on the next bear candle, it's immediately rejected once again. They try to do it again. This time around, we turn into a mirror candle low, nearly. And what I mean by that is if you look at these two candles, they are almost identical, other than the bear one has one extra tick underneath it, into a bull side candle. That is a huge clue that the sellers weren't really sellers. They're just buyers that are selling out of their position for profit taking from yesterday's movement. And we're looking for the buyers to flood back in and drive that thing back up to the high. So a beautiful entry right there to ride back up. And we were talking about this one in our chat room. We followed this one up for a nice drive higher, very strong bull follow through. And what do we see when the bears try coming back in again? Absolutely no follow through. As soon as a bear candle's triggered in, it's immediately bought right back up with a bull candle that closes on its highs. And then the bears try again, and they can't even close at the bottom. It closes all the way at the top. That's about as bullish of a bear candle as you can get. And then it follows it up with a bear doji, and then look at the bull follow through. The bulls smash through that level. All of the sellers know they're wrong if they tried selling the highs. All the buyers are adding into their positions like crazy. We have a huge flurry of buying pressure coming in at these highs, and all of these buyers are looking for another move up to equal out at least this breakout candle, but you might have a smaller measured move as well. So that is a beautiful opportunity again to add into the position if you're still in it. Otherwise, make a new one and ride that move right back up to those areas of resistance above us. Gorgeous movement in terms of market psychology, and the fact that we had this one pegged in the chat room as well helps a lot as too, so you can just kind of, see how it all works in the chat on top of these videos here. So very cool day on crude oil. Can't really ask for a much better combination between technical analysis and market psychology, and that's the big 1-2 punch that we're looking for. So hopefully you found this enjoyable, hopefully it helped you out, and we'll see you next time.